Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Hey, good morning, Paul. How's it going?
Good morning. Yeah. What's going on?
Yeah, you got a full house today, don't you?
Yeah, we've got a full house. We got all, Tammy's family, and we're going to her promotion this afternoon to Colonel. So before this, I was editing her 2,000 word speech, which is about 8 minutes it's not super long, but, so after this, I need to finish that and then, get everybody passes. We probably should have done this promotion off post.
Oh yeah, if you haven't got people passes, like put on the EAL list.
It's a pain now because you have to have like a real ID, and if you don't, you have to have two forms of ID. Meanwhile, people are just streaming across the border with no ID
And taking flights with no ID.
Yeah, it's totally fine.
No big deal. Yeah. Good priorities. Yeah, well, cool, man. Congrats to Tammy. Congratulations, Tammy. Well deserved. And that's no easy feat.
Yeah, she's done very well liked.
Yeah.
I mean, what can I say? I get good taste.
You get good taste. Yeah. So that's cool, man. And you're never gonna reach that rank because you're gonna retire, right?
I won't make it anyway. Like even if I stayed in another 8 years.
You're nobody going nowhere.
Yeah, I am.
That's what I tell people.
I am at my final rank, which is fine. Right?
Yeah, it's a good feeling to know that. I mean, what are you gonna do?
Yes.
Not promote me?
Right, and it's a good feeling that I've had for many years.
Yeah.
To be honest with you, yeah, like I've known I was going to retire since 2018. That's when I pinned Lieutenant Colonel, and I knew then that I was going to retire anyway. So that was my goal when I set out when I was a young lieutenant. I want to be, do 20 years plus or whatever, give or take, and be a lieutenant colonel. And so check that block.
Huh. That's interesting.
Being a life insurance agent, talking about the infinite banking concept was not a goal back then.
That was not a goal, but it's interesting you say that when you started out as a lieutenant, you said, I'm going to do 20 years. Because that kind of goes into something that we're going to talk about today, where if you set your mind on something and you don't leave any possibility of exploring different options during that time, you may miss out on some things. And it's worked out great for you. I never went in with that mindset that I was going to stay for 20. I was going to do my commitment and then decide. And it turns out I decided to get out, which has turned out very well for me. And I'm very thankful that I did that and was able to, with the help of having a bunch of cash value to fall back on during the transition period.
Right.
That was nice. But, well, cool, man. Hey, you might see a different background here. Got some bookshelves put in.
Yeah, if you're watching on YouTube, Dave got his built-ins put in. I was complimenting him on the color choice. I think it's fantastic.
Yep. I had nothing to do with it. It was all Hannah.
Well, yeah, obviously. Anything, you know him, he's,
So, yeah.
He's all man.
I'm all man. Here's the card, babe. Do your thing.
Do your worst.
Yeah.
Nah, she did a good job.
But be kind.
Yeah, looks great.
Yeah. Yeah, thanks, man. Well, cool. Let's get into it. I think today we're going to talk about a couple of case studies. So just recently we've had some clients reach out and just give us their, just a story of something that's happened to their mindset lately that's resulted in, more money in their pockets, actually, because they're thinking like a banker.
It's all about the way you think.
All about the way you think. It's like as if Nelson, said that on purpose multiple times throughout his book,
right?
Throughout his books. So, yeah. So this is real cool. So I'll probably do a lot of the talking here, explaining everything, and then we'll go back and forth. But this first one, we're going to talk two clients. This first one, I kind of labeled this case like dogma avoided, because there's some dogma out there when you start your policy. a lot of people interpret Nelson's book um, very, uh, very
Literally.
literally. That's the word I was looking for.
Hmm.
Where you must capitalize for 7 years, and
Yeah,
it
or
talks about
4 years, or
yeah,
whatever.
like capitalization period. Like you have to do that before you can touch any of that money in there. And I tell people, because that's a common thing. People come to me and they say, "Well, I know I can't touch that money for the first 4 or 5 years." I'm like, "Well, let's revisit that. Let's not close our mind off. That's dogma, right? Because you may have a need or an opportunity where it would be a very good fit to go ahead and take a cash value loan for something.
Right.
Yeah, but as long as you have that mindset, the long range thinking that I'm building this up, and this is not just my put the money in, take it in out right away
Right.
kind of game plan that's being popularized out there. But anyway, so this client about 6 years ago, he was actually somebody else's client, and he's actually not technically a client of mine. He's a friend, a local, and he actually is a licensed insurance agent and a practitioner. So, but he brought this up to me. He said about a year or last summer or something, he called me and he's like, "Hey, Dave, I'm this is how I remember it. I think he was doing yard work at the time and maybe even listening to our podcast. And he said, "Hey, I had an epiphany." He said, "I've got this employee stock purchase plan at work. But 6 years ago, I started funding a high cash value, high premium policy. And I decided so I stopped doing the employee stock purchase plan, stopped doing all of my other investing, and funneled all of my capital into my premium to fund this policy. And my plan was I'm not going to touch this money for 7 years. All I want to do is capitalize." So that's what he did. Great, right?
Yeah.
Good for him. But by saying, "I'm not going to touch this money," what he did is he closed his mind off to any other opportunities that were
Right.
out there. Right. Well, so in this case, the employee stock purchase plan is pretty cool, where they take money out of his paycheck every paycheck for 6 month period, like June through December, January through June, or July
Right.
through December. And at the end of that period, the employee is able to use that money that was taken out to purchase company stock at 15% below the lowest stock price during that 6 month window. Like that could be a pretty incredible discount. So he, about last summer, he was like, "I don't have to do just one of these things. I can do both. I have cash value." So what he did, and I'll get into the numbers a little bit here, but actually I'm talking client, the second story first. I just realized that. Anyway, so what he did is he was going to take out about $1,200 a month from his paycheck to go into that stock purchase plan pile. So he needed about what's over $7,000 of cash to get by, because now that money's taken out of his paycheck. So he needs to backfill that for his personal life, pay bills and whatnot. So he took a loan from the insurance company for that amount, what, $7,200 or so, or $7,500, and that covered him for that 6 month period to make up for the $1,200 a month that was coming out of his paycheck for the stock purchase plan. Well, at
Okay.
the end of that 6 month period, he was able to purchase stock at $55 a share and turn around and immediately sell it for $90 a share. So what he ended up getting was, what did he pay in this scenario? The only cost to him during this time was the $227 he had to pay in interest to the insurance company
Oof,
to
it's
take
not a
that
lot.
loan for 6 months, right? That was the only cost to him out of pocket. What he made on the sale of the stock was over $4,400.
So basically, his investment was 227 in interest, and he made over 4,000.
And he netted over 4,400. So that means he actually made over 11,000. He was able to pay back a $7,500 loan and all the interest, and still have remaining $4,400 that went into his pocket.
Wow.
How cool is that? And he's like, I'm kicking myself because I could have been doing this for the last 6 years,
All along. Right.
all along. I mean, imagine that's a $9,000 a year raise right there.
Phenomenal. And
Yeah.
he used tax-free passive income to do it from the life insurance company when you think
Yeah.
about it.
How cool is
Right.
that? So
IBC
now
in
he,
action.
he could use that $4,400 now to start another policy, right?
With you, obviously. No, I guess with us.
Well, with himself. Yeah. Yeah.
Should give you the finder's fee.
Yeah, right. So, but he
Awesome.
wrote me that, and he was pretty excited about sharing that. Also, pretty regretful about not realizing it sooner, but said, "Hey, this really goes back to what Nelson says about use it or lose it." So
Yes,
let's talk
page
about that.
35.
What does that mean? We were talking about that before we hit record here a little bit. What does use it or lose it mean? Page 35 in Nelson's book. What does that mean to you?
Yeah, well, you have to make the infinite banking concept a way. It's a lifestyle. I think I've heard David Stearns say this, Nelson's son-in-law. It's a lifestyle. You have to make it part of your life. And now, we're several years into this business, and we have hundreds of clients, and we've had several examples now, and they're becoming more often, where clients are seeing opportunity, they're well capitalized, and they're thinking differently. And now it is benefiting. We've had a client, John up in Alaska, who was able to disconnect his escrow for his mortgage and pay the taxes out of it, incorporate that money as premium and then take a policy loan to pay the taxes. Anyway, just phenomenal, right?
Mm-hmm.
And this is just another example of IBC in action and people thinking critically. And as Nelson would often say, like you said earlier, it's all about the way we think.
Absolutely. And it really separates the product from the process. And Nelson does a great job of that. And when he says use it or lose it, he's talking about the process of the infinite banking concept, which is what all the naysayers get wrong, is they focus on only the product.
Right.
The product is a piece to the puzzle, a necessary piece. But the process, nobody, like we have an episode called, named something like the unseen advantages of IBC, or basically the cost of not doing it. Also,
right.
The unseen advantages are exactly this. What this client went through is having this epiphany moment where he can stop thinking either or, that mutually exclusive mindset, the zero sum mindset, and start thinking, how do I do both, and how do I think more abundantly? And I think it was a realization to him that he needs to make this more of a way of life. Because if you don't, and you're only focused on the product, then you're going to miss out on a whole lot of ways to play banker in your own life.
Yeah, because then you become a person who just owns dividend-paying whole life insurance, which in and of itself is wonderful. In fact, I was talking to Tammy's uncle last night, and he actually has several policies with, I'll name the company. He has several policies with Guardian that he bought on his own. He has 3 girls years ago, and they're grown now. They're all in their 30s. And I was like, that's phenomenal. And, let's take a look at these things. Is the dividend buying PUA. Anyway, so you can be someone like that who just happens to own a great product, but doesn't know how to implement it into an overall financial strategy of cutting out the banks eventually. Right. So it's a key difference too. And it, as we see here, can result in a tremendous windfall. Like every year, that's gonna be a windfall for him. It's more money that he would otherwise not have if he not had that light bulb moment out of just, oh my God.
Exactly. Yeah. And he said, even in the worst case scenario, so this client, or this practitioner is more of an engineer mind. So he graphs everything out, does a spreadsheet.
Oh,
and
gosh.
he even did a worst case scenario where if the stock price, if all he got was a 15% discount, right? If the stock price was the same price at the beginning as it was at the end, right? And stayed there the entire time. So he only got like in this case, he got a much greater than 15% discount. He got a huge discount. But worst case, he would still, after all that is done, walk away with a net gain of over $1,000 after repaying his loan and the interest.
Right.
But in the scenario that actually played out, where he netted over $4,200. You know what his return on investment was? So ROI is a different calculation, right? ROI is your net profit divided by your cost, right? I think I'm saying that right. So he took his net profit divided by the cost to him. So his net profit being what, 400 or $4,238. His cost was $227. That's a 1,866% ROI.
Yeah, in a matter of whatever, six
6 months.
6 months.
Right. So how crazy is that?
Yeah, it's phenomenal. Yeah.
Yeah.
And
So
now
he can
he can
brag
do
about that at the next cocktail party when people are like, I made 12% on my Dave Ramsey suggested mutual funds last year. Oh, I made 1,800%. No big
Right.
deal.
No big deal.
Yeah.
Let me show you how.
Yeah. Right.
Read this book too. Here's
Exactly.
my card.
So,
Phenomenal.
yeah, really cool. Well, so let's go on to case number 2. Do you want to talk through that one? Because you're more of a car guy. This has to do with cars.
Yeah. And of course, automobiles have, like everything else, have gotten way more expensive than they were just a few years ago, right? I went to the car show last year and I was looking at Jeeps, just basic Jeep. Yeah, they're nice, whatever, 4-door, whatever. 70 grand though for a Jeep.
Yeah.
A Jeep.
Right?
Like, come on.
Yeah.
The doors are like paper mache.
What?
Like,
So here's my insight to the car industry. It's not inflation that's driving up the price of cars. It's the basic calculation of how economics works, supply and demand. I think what dealers realized during the COVID era, when supply was very low because of
yeah.
so many different factors that they couldn't control, they were able to sell cars at a much higher price.
Mm-hmm.
So now they realize they can sell fewer cars and make more profit. So now it's artificial. Now they artificially keep the supply low so they can keep hiking the prices up because they make more money doing that.
Right.
So they've realized they broke the code on it, and all of us get to suffer from it.
Yeah. But I think it's about to backfire. Dealerships have just loads and loads of cars. I watch a lot of just like YouTube influencers that do reviews, and they're going around to dealers, and there's just a ton of inventory.
Yeah.
So I think if people are patient, I'm already seeing discounts on some stuff. I'm not saying it's going to be like that everywhere for every type of vehicle, but it costs them money. In fact, the dealer went in the other day. There was a vehicle in there that's been sitting there for 8 months. It's a 2023.
Wow.
Hasn't moved.
Yeah.
So anyway, this is kind of a similar example, right? Of it's all about the way you think. So there's some popular influencers out there in the financial space that he wants you to buy a crappy car. It sounds like to me, but some people are fine doing that. I'm not, but you pay cash for the vehicle, right? That's the best way to buy a vehicle is pay cash,
right? For many reasons. So supposedly paying cash is going to get you the best deal too. I don't know how many people try to walk onto a car lot and say, I'm paying cash. Right. And they say, oh, well, let me give you the best deal we have. They don't care.
Right.
They could care less. In fact, they make less money off of you because you pay cash than in any other form of payment.
Right. I will say that, and this is a slightly different discussion, but related, having cash will put you in an advantageous position depending on what you are trying to do. And not necessarily talking about
100%
purchase, just anything, right? Cash is still king, but yeah, it's they want you to finance it. And that's what this example is. So check this out. So have a guy that needs a new vehicle, right? This client was offered $1,000 discount, and we see this all the time, right? In many of our listeners, I'm sure you've experienced this, where, hey, if you finance it through us, we'll give you, $1,000 cash back or whatever, right? Or $1,000 discount on the vehicle, whatever it may be. So instead of paying cash, for example. So, okay, fine. So this client, though, was able to flip the script. He's like, all right, I'll use your financing. I'll get the And I think he probably took a higher interest rate because, right? I don't know if was it a used car or new?
It was slightly, yeah, it was used,
He's used, right? Because
but
used car rates are higher than
and it
new
was
car rates.
9% APR.
9%.
So
Okay.
if they're going to
Yeah.
sucker you into a 9% APR, they're going to give you a discount for it to make it more enticing. So
Right.
he's like, okay, I'm going to take the bait, but not for the reasons you think I'm taking it.
Right.
Yeah.
And normally when you use their financing, there's a period of time where you have to make 3 payments to us and then you can get out of it, or whatever it may be. I don't know what the exact terms of this one was, but so he does that. But he's got the cash, right, in his life insurance contracts. So what he does is he takes that $1,000 discount, makes whatever required payments he does, so spends a little bit of interest, a
In this
minute
case,
amount.
I actually asked him if there's any
Yeah.
prepayment or early payoff penalties, and he
Yeah.
said no. So like,
Okay. So
he
no
plans to
restrictions.
turn it around
He can turn around.
in the same month.
Right. So he
Yeah.
probably makes one payment and then can turn it around. I'm guessing.
Yeah.
Awesome. So he makes the one payment, pays a little bit of interest to that financing institution, and then policy loan comes in. He pays the car. He pays for the car. He pays the note off. Right. He's got his $1,000 from them.
Yep.
He spent a little bit of interest to get that $1,000. Now he has the title for the vehicle, so he owns it outright. So there's nothing on his credit report now. There's no lien on it, and now he has complete control. So that is, a smaller but similar example of just IBC in action, and how when you live the IBC lifestyle, when you are in a position to capitalize on an opportunity, because this is an opportunity, right? This was an investment for him, right? That's how he thought about it. Like, I can flip the script and make money off this deal, and in the end, they're not going to care because they're not going to know. They're like, oh, we got this guy at 9%. Well, not really.
Yeah.
And now he's going to take the payment that he was making to that finance company, and he'll repay his policy loan.
Absolutely. So same payment, and if he follows Nelson's advice, he'll add a little bit more to it. So if it was $500 a month, maybe he'll pay $550, maybe $600.
No, exactly right. So folks, he's repaying the policy loan, and maybe, and I don't know if this is the case, but I just want to explain this, that maybe he can't repay the note and pay all of his paid up edition premium, let's say, right? Or maybe he can. So it's going to depend. Nelson talks about additional interest, and in the book, he's specifically talking about PUA, and that could be in the form of a new policy that he opened, whatever. But yes, pay yourself more than you otherwise would have to on the open market.
Right. And let's say he is paying back $500 a month towards his policy. Once he gets that paid off, what's he going to do with that $500?
Where's that $500 going now?
Well, if he's thinking like Nelson suggests, he's going to be saying, well, I'm already used to making this $500 a month payment. I can keep that going into premium on a new policy.
I think we find that too when people start practicing and they realize either that their premium on their first policy, let's say, is too small because it makes them a more diligent saver. They start to see more waste in their spending, let's say, and we all have it, right? We all have it, but so anyway, yeah. There's always more premium dollars generally.
Yeah, but I love this example, this case study on this client, because it really gives you a great understanding of what it's like to start thinking like a banker. Because he texted me, he said, I went in to the dealership expecting to pay cash as leverage for a lower price. Turns out they offered an additional $1,000 off if I used their financing. I said, sure, I'll just pay it off in the first month or two using a loan against our cash value. Boom.
Nice.
So he went in thinking, I'm going to do it one way, but his mind was open enough to accept another way. Like, so does it ever make sense? I mean, on the face of it, it sounds stupid. Hey, you can go in and pay cash for a car, or you can finance it at 9% interest.
Right.
What's the best thing to do? Most people, right, they'll think, oh, pay cash. Absolutely. Because they haven't asked all the right questions.
Yeah, and there's more considerations, right? Maintaining
Always.
liquidity.
Right.
Really, every situation is going to depend, right? But in this case, it was a no-brainer. I would encourage him next time. This is where you can get into some fun, right? Where it's like, yeah, I like the idea of financing through you guys and getting that $1,000.
Hmm.
Can you make it 1,500?
Yeah.
And
Yeah.
then if they say no, say, well, I would do it at 1,500, so I'm going to go try somewhere else. And then you walk out and let them chase you, and they will.
Yeah. Or see, hey, can I see your interest table? Hey, well, that's 9%. What if I pay 11%? Will you give me $2,000 off?
Yeah, right. Like, you never know. But this gets me thinking, because we buy a lot of cars, and
Yeah.
some cars are, the price is the price, but you never know. When the kids need a car, maybe coming up, it's going to be used, obviously. So
Yeah.
yeah, this is interesting.
Uh-huh.
Hopefully this helps people. This is good.
Yeah. But as you said, cash is king. But having cash and paying cash are two different things.
Yes.
Having cash allows you to make decisions from a position of strength
Correct.
because you don't have to accept the terms from the seller if you don't want to. But
That's
you
right.
have, because you have the cash. But
Yep.
paying cash and only thinking paying cash, oh, you're going to miss out on some opportunity.
It's the golden rule, right? You have the gold, and therefore you get to make the rules.
Exactly.
And you can make them to your advantage, and
Yeah.
you should.
Yep. Brilliant. So I love these. I had another car related email come in, I think yesterday, from a client who, I think a shared client, who said, "Hey, I went to get a car loan, and they said I don't have enough loan history to get a loan from them to go to buy a car." He's like, "Man, that's just another reason why I love infinite banking, and I love having access to storing my cash somewhere where nobody asks me any questions when I go borrow it."
Yes, and our listeners have heard my story about this construction loan. It's on a larger scale, obviously, but it's just super annoying.
Yeah.
Yeah, it's very annoying. Like, people that don't know you judging you and saying, "Oh, whatever." I cannot wait to be past that point where I don't need them anymore.
Yeah. Or maybe fun to make them go through all the work and then say, "Never mind, I'm just going to pay
Well,
cash."
one of the people is about to find that out. So
Yeah.
yeah, I mean, they took too long. So I think. Oh, so here's a story. I don't know if this came up last week or we talked about it or not, but I told I was honest with the guy that is playing catch up, who's
Yeah.
a rock star, phenomenal. He I was like, "Listen, this other bank is at this interest rate. Can you guys beat that?" He's like, "Send me an email saying this, and I'll go to my manager, see what we can do." Sure enough, 25 basis points lower now,
So you're
which
going with
beats
them?
the other bank. Is
Yeah.
25 basis points lower than they were previously.
Yeah.
So I just worked that to my advantage. So now I'm at 6.5, which really isn't that bad when you look at history. But
Yeah. Right. Yeah. Well, and now you
So-
get to send the the email to the other company and say, "You're fired."
right,
You know,
and they don't know it's coming.
string them
just-
along just like they string you along. That's what I would say.
Well, that's the thing. I'm doing parallel efforts here because of redundancy, right? 2 is
Yeah.
1, 1 is none. So once that's, once I get a closing date for the other one, I'll be like, sorry, we're Dunsky. I got a better rate somewhere else.
Yep. And better service.
Way better, just way better service. And the
Yeah.
other lady's, again, she's nice. It's just, I need some attention here. Like, how many of these loans you doing? Like,
Yeah. They can't be doing that many. Not right now. Yeah.
So,
Well, cool, man. Good update.
mhm.
All right. Well, hey, have fun at Tammy's promotion. Again, congrats. And next week's episode, we're going to bring to you live from the IBC think tank in Las Vegas, Nevada. And I think our plan, right, is to, because we're heading off to this next week.
Mhm.
This recording will come out after it's all done, but we plan to get together with several other IBC pipe hitters and do a roundtable. So yeah, come back for that one. That'll be a really good one. You'll get to hear from some really other great minds and great dudes in the business.
No, it's gonna be great. I always look forward to going to the think tank. I'm especially looking forward that it's in a different location. Finally,
That is not Birmingham. Yeah.
yeah, it's just so hard to get to, and the Uber game there is super weak and expensive,
I had to wait
right?
for a
Remember,
long
it goes.
time. Yeah. It's
Yeah,
so we know
I
he's
always tell
flying to
Dave I'm
Vegas.
gonna wait for him at the airport, and then I don't because
Yeah.
the Uber price drops by like 400%, and I'm
Oh,
like,
I
I gotta take it.
I know. I think it was like $80 for me to get from the
Yes.
airport to the hotel for like a 10 or 15-minute ride.
Yeah, and it's a
It was
quick ride. Yeah.
outrageous.
Yep.
Yeah. But yeah, so we're not going to be on the strip, which is nice. We'll be south, which I'm not much of a fan of.
I'm not a big Vegas person.
Vegas.
I don't
Maybe
care
once
less
a
about it.
decade is probably pretty good. You
Yeah.
know.
I went to
Let
the
your hair
Joint
down.
Firepower course there at
Yeah.
Nellis back in the,
Yeah, I
back
did
in the
that.
day. So
Yeah.
had an A10 instructor actually. He was our main instructor.
Well, good. So you're in good hands.
I was in good hands. He was a good
Yeah.
dude.
All right. Well, cool. Hey, have a great week, everybody, and look forward to having you back here next week. And until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.